The market opened looking like it was on some shaky grounds. All the indexes were down, and we were certainly at a high. So to see the market kind of spill from there and spill aggressively was a little unsettling for many people. And the market certainly has the characteristics of being at a high. The prices, the valuations, the retail investors, the margin utilization, although there's still room in that margin utilization area. So one could have thought very early, oh man, I got to sell everything and get out of this market because we are at a top and I'm not going to have many opportunities to sell the top. That is one line of thinking, which I'm sure many people had, but I'm under the impression the market rally is going to continue. Now, I'm not saying that some sort of drawdown of some extent is possible, but I think it's highly unlikely that we'll see a significant sell-off. Let's not forget, there's been obviously a lot of liquidity and stimulus put into these markets. I think inflation is yet to be seen, and earnings are going to be coming in strongly next week. I'm talking about in terms of quantity. We've had high quality earnings already happen, and I expect that trend to continue. And it just is a very fertile environment right now. I know it sounds crazy with COVID, but here's the market. It's been resilient the whole way through. It has continued to rally, and I expect that rally to continue with some inflation undertones that is going to propel it. Now, I'm not expecting crazy gains. I'm not expecting another, 30% year or whatever 2020 was in whichever index. But I don't see the market turning down. I just see that as a very unlikely situation. The macro level forces are favorable to the market. Inflation being the most important. And today, Joe Biden talking about the last inflationary change we need to have happen in order to really start seeing it, which is an increase in the minimum wage. So a combination of these things is just going to lead the market to continue rallying. And there's not really a catalyst for a downturn. In addition, COVID cases have seemingly plateaued or peaked and are beginning to turn down. We're about to have the vaccine. Savings rates are at very high levels. That has led to some paying of debt and other things, but it's household balance sheets have been okay in this pandemic. So some businesses are going to make it out on the other side, improved, having weathered a storm that will make them stronger. And I expect that to continue. So am I selling right now? I mean, it's not like I haven't sold anything. I've trimmed a little bit. I definitely like the idea of having a cash position right now and at these times. But I'm not, getting below 90, 85% allocation anytime soon. I just see this as a good market in a good fertile area, and it's just going to continue. And maybe we see something like a 5 to 10% drawdown, and within that range, I will begin nibbling again. If an individual stock that I really, really like pulls back, I'm looking at that as an opportunity to add to my position. So, if you see a crazy run, feel free to trim. That's prudent investing. If you see a big dip in something you like, buy the dip. That's prudent investing. We just kind of got to look for good prices, be wary of good prices, be wary of expensive prices rather, and focus on price in the stocks we're buying. It's a stock picker's market, and I expect this market run to, believe it or not, continue, even if there's some sort of 5 to 10% drawdown, some sort of 1 to 3 month consolidation. We are poised to continue the run. So until next time, peace out.